Hey, good afternoon. This is Julie. It is Monday, Tariff Tantrum Monday, June 25th, and the markets are doing what we thought that they were going to do from last week, and that is sell off a little bit, following all the news media and the reporting on it. And so we got down to some key support levels and we kept blowing through them. And as we kept going through them, I'm thinking to myself, certainly we're not going to break the gap, right? And that's where it ended up at 7,000. And let me show you the daily so that you can see how I came up with my, circuit breakers. First, I had this conglomerate as support, my first level, and it broke through the first level. Then I came down to get this grouping and it broke it, catching that high, and it did break through. And then here is the gap, that March gap that kept getting tested back and forth, and that finally held the gap line. So that finally held, and we're coming back into my prior supports. And, it really should hold and bounce back up and give us a couple of days of consolidation while the market tries to understand what it is the administration is trying to do, which is to benefit the U.S. companies. He's not trying to harm the companies. He's trying to benefit them by changing this abhorrent behavior from the Chinese of taking the intellectual property of any company who wants to do business in their market. So you own a company, you would have to give them all your trade secrets and intellectual property in order to do that. And that's just wrong. And so it would not only benefit the United States companies, it would benefit the global companies in the world. And I'm a free trader. I guess you know that from hearing me. I don't think there should be any tariffs anywhere, but I can certainly understand, the president wanting to keep steel and aluminum a little bit protected because you don't want to be asking anyone, allies or whoever, for permission to send you steel should he need to create some um, munitions or, weapons or whatever you want to call them at any time that he wants to gear up. So that is a given. But outside of steel and aluminum and that intellectual property, I think it should be wide open. And I think that would benefit the entire world. So hopefully people will get around their fear of this. There's no way China's going to win. It would take a third grade education to figure that out. We are going to win that war, and we're going to win that war with whoever. We've got earnings coming up early July. We've got second quarter GDP. They've bumped up their estimate, they being the Federal Reserve Bank. They think that it's going to be at 5%, not 4.5%, 5% growth. I mean, we're coming into some phenomenal numbers. Our unemployment, lowest in decades and history for a lot of other people. I mean, the growth, the repatriation of money. People are buying our treasuries. Morgan Stanley came out today thinking it was time to step back into buying those 10 years. But irregardless, I think we got over our skis a little bit today. The gap line held. This should bounce back. Hopefully, we can get some positive press coverage. I think that has a lot to do with these sell-offs. Is the media has a narrative, a story for the day. They just pound it to death and run with it, and it just spooked the market. The market sold off because that's what they were supposed to do. Everybody was selling off, so you've got the algos running things now, so it just triggers them. So you change the narrative, you get back into the sideways consolidation normal trading system. But let's take a look at the charts real quick on this. It was a down session the entire way. Pull this open and you can see the four levels, 1, 2, 3, 4, just basically red most all of the session until this very end part where momentum started waning, and then we did get the 5-minute bounce on 7,000, came into it, um, checked, came back, tested, and then bounced, turned around and bounced. And here's that big momentum divergence on the 5-minute chart. You can see this lower low with much higher low momentum. So that, and then when it did finally give you your white candle, that was your signal on this inflection that things were probably going to be turning around, and it did. In fact, it's on a 65-point bounce off that bottom, so that's fantastic. That is really good news. I'd like to see it get back up there. There was no reason for it to get under its skis, ahead of its skis, and that sell off so hard. So maybe some good news came out of it that I haven't heard. Let's look at crude. Crude gave us a sell-off at that gap, its gap close this morning. Let me show you that. So today was Gap Monday, I will call it. And here we were, we came in and tested the level. Oh, I'm sorry. Thought I had changed it. Duh. There it is. They're like, what gap? What is she talking about? This gap down. Sunday overnight. Came back in, tested the level, got to the top of the level, took a couple of ticks off that top, but did turn around. So here was your candle right here. This down candle gave you that 15-minute momentum inflection to the downside, and then it just stayed short. And then once it started flattening out, the move's over. But it did come down to test its 267.80. What is that, 80? Remember the 80-20 rule? Crude oil. Okay. So I would expect that this is going to be a double top, seen as a double top, and double top down. There's no reason to keep that buying into increased supply. I I don't know what the other day was, but normally you say that you're going to increase your supply, you would expect that price to come down. It's just called, the law of supply and demand. So don't know about how many bulls that they're going to be continuing in that crude long. We'll have to see how crowded that trade is and see what the market does. Just pay attention to your monitor. As Michael, told me in the trade room this morning, don't follow your bias. We can get married to those shorts or those longs and just get blinded by what's actually happening on our screen. So best advice, follow the system, follow your process, follow your patterns, and come in and take the trades on these charts that we have set up. This was that up, that 50, 60 point bounce off of 7,000, but otherwise this was that choppy part, and here was the good parts. And I mean, it was good trading this morning on the NQ. Make no mistake, we are not complaining. Everyone was very pleased with their there it goes. Very pleased with this morning's price action. Had a lot of triggers, had a lot of trades. I've got it set up where we can take the all fours. So when this sets up on an all four, I can get the signal to start coming through. Then it's showing me that the linear regression all is printing, and that's when I can start taking them. Of course, I have one that is printing on a 1 also, and so just keep in the market when your signals are printing, or you can print on a trend channel also, if you prefer just to stay with your trend channel with the shorter tick chart. But we do have a process, learning to stick with it and to adhere to good risk management. That risk management part is crucial. If I'm in a short down period like today on that 15-minute, not even a white candle, don't buy the bottoms, just stay with the shorts, and wait for your green to come on your screen and your market analyzer. There's no reason to even try to hit a bottom and trade any of these momentum inflections on a shorter time frame. You'll just get killed. Stay with the trade until it changes. And I think that's the wisest advice for all of us going into this week, next week earnings, and with the holiday short abbreviated trading week, everything that's going on, just play it one day at a time. We've got some great economic indicators to trade this week. So come check us out in the trade room and have a good night. Hope your day went well, and we'll see you back at it tomorrow. Thank you so much.